Good morning and welcome to the Eastside Recovery Hub Financial Webinar Series hosted by One Redmond and One Eastside. Today is October 15th, 2020. My name is Christina Hudson and I am Executive Director and I will be the moderator for today. All our Eastside cities and chambers are partnered together to give the highest level of support to our local business community. And I wanted to thank all the partners on this screen, our Eastside cities and our chambers for the work that they are doing. Please note, if you need to see an advisor with questions that were not answered today for free of charge technical assistance, please reach out to One Redmond at info@oneredmond.org and someone will contact you and we can refer you to our technical assistance partners. We have been hosting our financial resources webinar series since the beginning of the pandemic, and today we continue with a focus on PPP loan forgiveness applications for loans under $50,000. Before we begin, I want to cover a few housekeeping notes. If you need technical help during the webinar, please use the chat box. We have staff on hand to try and help with any issues you may be experiencing. We also have links to pertinent documents in the chat box that you'll be able to access. The tools we have here will also be available on our website, eastsiderecoveryhub.com. If you have questions for the speakers, please use the Q&A box. We will do our best to get as many questions answered as possible today. And this webinar is being recorded and we will send out a link to it to all of you as soon as it is ready. We know that many business owners are seeking guidance during these crazy days, and we are hoping to help you navigate through all the information as we know it today. Our goal is to get you reliable information and guidance as soon as it is available. However, this is still a dynamic process, and as of today, October 15th, all the content you will hear on this webinar is accurate. And as we mentioned before, this webinar and as all our past webinars have been recorded, and additional resources are available on Eastside Recovery Hub webpage at eastsiderecoveryhub.com. So let's get going with our program. The U.S. Small Business Administration, in consultation with the Treasury Department, has released a simpler loan forgiveness application for Paycheck Protection Program, or PPP loans of $50,000 or less. This action streamlines the PPP forgiveness process to provide financial and administrative relief to America's smallest businesses while also ensuring sound stewardship of taxpayer dollars. To walk us through this process, today we have Steve Burke, Western Washington Regional Manager for the Washington Small Business Development Center, and Jeannie Sacco, Marketing and Outreach Specialist, Seattle District Office for the Small Business Administration. And now I turn it over to Jeannie Sacco, Marketing and Outreach Specialist, Seattle District Office, U.S. Small Business Administration. Jeannie?
Thank you, Christina, and thank you to you and your team at One Redmond for hosting this update of the PPP forgiveness loan process today. I just want to share a little bit of information about what's happening with the working capital programs we have at the SBA to assist small businesses. The Economic Injury Disaster Loan Program, which is applied for online through the SBA.gov website, is still available. And there are loans up to $150,000. They are not forgivable as of today, but they are at a low interest rate for both nonprofit and for-profit businesses. The interest rate for for-profit businesses is 3.75, fixed for the life of the loan. These loans have a maturity of 30 years. For nonprofits, the interest rate is 2.75%, again fixed for the life of the loan up to the 30-year period of time. On the PPP program, we are pending utilization of the remaining $135 billion or so that was originally budgeted for the PPP loan program that was unused as of August 8th when the program sunsetted. So there's a lot of activity that's going on in Washington, D.C. regarding what to do with that $135 billion for the benefit of the small business community. So stay tuned. Check, your radio stations, TVs for business information. You can also check out the SBA website and the U.S. Treasury website for updates as well. What I do want to let you know is that your representatives at the federal level are listening to you. And from the time the PPP program was implemented in a very short period of time, it took basically about 7 days or so to get that program together. There have been changes to it that have all been for the benefit of the business community. And that includes transitioning it from an 8-week use period to one of 24 weeks. There's been a modification of how the funds are allowed to be spent from 75% for payroll and not more than 25% for other business related items such as interest expense, lease payments, and utilities, to the split of at least 60% may be used for payroll purposes and not more than 40% may be used for the other business expenses that are eligible. So again, that was for the benefit of the small business community. Safe harbors in relation to the full-time equivalency or FTE for your staffing were added to both application programs or products that we had at the time. And when we walk through this 50,000 or less PPP application, you'll see the benefit that has been extended there as well. The SBA opened up its forgiveness portal on August 10th. And after a little bit of a slow start, we're picking up steam and loans have been forgiven. So that's an outstanding issue. And I just want to also do a thank you to the lenders that are in our community that really just stepped up in a tremendous way. And we added a lot of lenders, thousands of new lenders to the SBA lending family with the addition of this product to really go out there and step it up for our community in terms of all size businesses. So that was really wonderful. And I have to say that organizations like One Redmond have done a tremendous job of keeping the business community in their areas informed, which is a great relationship to have within the community. And then definitely the small business development centers that are throughout the US have also been a very productive resource for the community and doing a lot of technical assistance. So we're going to start the program. Steve Burke is going to kick this off with a summary and in a very detailed way about what's happening with the programs. And then I'll follow up with some examples for you. So thank you, and take it away, Steve.
Thanks, Janie. And while we're switching the slide deck, if we can, let me see, get that going right here. I want to, while we're getting this set up, I want to make sure that I'm going to be turning off my video here in just a second as we get started. But I just want to let you know that we're all working from home and bringing this to you during this difficult time. But I want to start by thanking Christina and the One Redmond staff for inviting us to bring this information to you at this time. We're going to cover an awful lot of detail. As Christina had said, please put your questions in the Q&A and we'll get to them as we go through this. And with that, what we want to talk about today is these things. We're going to cover a little bit more about the EIDL and the PPP loan update information. There's now 3 different forms that you can use for this. That includes this base 3508, then there's the easy form, and then as you might have just heard from Janie, the 3508S. And then you've got changes that came with the Flexibility Act on June 5th. We've got some definitions we're going to cover for you. We're going to cover the details of the 2 forms and why you should choose one over the other. We're going to explain a little bit more about what applies to those of you who are self-employed and sole proprietors. And then we're going to cover the lender process for loan forgiveness, as well as the safe harbors that Janie referenced, documents that you are going to need to be able to prove your eligibility and forgiveness, deduction of the EIDL advance from loan forgiveness for those of you that received an EIDL advance, and then what are the representations and certifications. And then Janie is going to cover detailed step-by-steps of how to go through this. So on the EIDL, that's the Economic Injury Disaster Loan. Those are provided directly by the Small Business Administration through the Office of Disaster Assistance, or the ODA. These are still available, as Janie had mentioned, and you would apply here. You will be receiving, I understand, a copy of this slide presentation or have access to it. So you would know how to connect through this link here to be able to apply for the EIDL. If you have not previously applied and you would like to, the EIDL is going to be available from a legislative standpoint up until the end of December. So those of you who are interested and still need it to be able to get through this tough time, I'd encourage you to do that. It's a 30-year basis at 3.75% for for-profit and 2.75% for nonprofit, and which would make payments return pretty easy for you to deal with in most cases. The EIDL advance, which was originally back in the early days of the EIDL, an offer to encourage people to get into the program, was $1,000 per employee up to $10,000. Those are no longer available, but for those people who did receive them and who had a PPP loan, the idea being that you couldn't get a grant, which is the EIDL advance was considered a grant, and loan forgiveness from the PPP for the same money. So it's going to reduce your PPP loan forgiveness for whatever portion of the EIDL advance that you may have received back then. If you did apply for the EIDL and never did get an answer or don't understand your status in terms of that, there's an 800 number that's available for you to call. The tip that we have for you is that if you do, call that number and ask for a Tier 2 person. The Tier 2 people are the ones who have access to a specific account information and can tell you the status of your EIDL application. If, however, you were denied an EIDL, or you want to request an increase in the EIDL funds, which, by the way, are still capped at $150,000. But if you want to apply for an increase or you were denied, the only route that you have is to go to this email address, pdcrecons@sba.gov. One of the things that we've learned is that many of the denials for the EIDL is because they didn't understand who the ownership basis was. So those where that's the case, you may be required to complete this form SBA 3501, which is going to ask that any various partners complete a form 4506T, which is a request for tax transcript, so that they can understand who the partners are and what the ownership basis is. For loans that are over $25,000, they do place a uniform commercial code or a UCC filing, which essentially amounts to a lien on the business assets, not personal real estate assets, but on the business assets. They'll place a lien on it for the duration of that loan time. As of today, the PPP loan program is no longer accepting new applications. As many of you may know, there have been several attempts to pass additional stimulus legislation through Congress. There was an announcement yesterday that it's unlikely that a new stimulus is going to be passed by Congress prior to the election, at least. So we're no longer thinking that that's likely to happen, although hopefully sometime before the end of the year, they will do another update on that. But in the meantime, as Janie had mentioned, and I think Christina referred to, there is a new form that's going to make it a lot easier for several of you that we'll describe. When the program stopped accepting new applications, there were nationwide just over 5 million of those at $525 billion that were processed through commercial lenders, including big banks, community banks, and some FinTel lenders, totaling 5,460 total lenders that were involved in that. The PPP loans were not done by the SBA. They were done through lenders, and that distinction is important as we talk about this. In Washington, there were 107,000 loans for over $12 billion. One of the things that's real important and speaks to the conversations that we're going to have today is that 86% of all of the PPP loans, of the over 5.2 million of those, were under $150,000, and 68% of all of those are under $50,000. So when we talk about this new form that removes some of the restrictions on your getting loan forgiveness, it's going to apply to a majority of those of you that have PPP loans. So let's talk about what that means. Before we get there, though, the information that we've got today was relevant best as we can as of yesterday, but neither myself nor the Washington Small Business Development Centers are the final authority on this material. As has happened several times, this information is subject to change with new legislation or additional rules from the Treasury or the SBA. Last Friday, the SBA and the U.S. Treasury announced a new simplified form for PPP borrowers of $50,000 or less. And this allows that borrower to waive the full-time equivalent requirement that was existing and the 25% reduction in staff wages so that you can earn full loan forgiveness. And so we think that this is a huge improvement that's going to further increase the number of people who easily get loan forgiveness and make the processing of that loan forgiveness application even easier and simpler. You are still going to need to have certain documentation, very similar to the other forms for those of you that are utilizing this and are eligible to. And it's important to note that those with combined debts over 2 million based on affiliated ownerships cannot use this form, even if your PPP was less. I don't think that there's very many of those that have multiple entities with affiliated ownership that would have the combined debts of over 2 million and a PPP loan of under $50,000, but I'm sure there's some. But if that's the case, you won't be able to use this form. Just one of those things you need to know. So we now have 3 forms. So which one should you use? We're going to go through this in more detail. The 3508S, which is the new one, is 1 page. And for each of these, there is an additional optional one that captures demographics. Janie is going to share that with you when she does her presentation, plus a documentation that's required. And I'm going to share what that documentation is for each of these for PPP loans of $50,000 and less, where there's no multiple affiliations with combined debt of over 2 million. The 3508EZ, which came out with the Flexibility Act that was effective in June, is 2 pages plus the documentation. And that's typically going to be used for people that have PPP of over 50,000 and you meet one of the 3 items of criteria that I'm going to explain. So this works for owner-operated small businesses with loans over 50,000. The 3508 long form, 4 pages, plus 2 additional pages in the instructions that do need to be completed. These can be used for any of the PPP loans, but most likely it's going to work best for larger businesses with more detailed PPP situations. or an attempt to meet one of the safe harbors that we're going to describe. So what were the additions in the Flexibility Act of June 5th? They included the covered period that can be changed from 8 weeks to 24 weeks. And it's safe to say that a majority of those PPP borrowers are choosing and operating on the 24 weeks. But for those that were funded prior to June 5th, you do have the choice of 8 or 24 weeks. And those that were funded after June 5th, it's only the 24-week covered period. If you do not wind up, just so that you know, with full loan forgiveness, the remaining amount will be a loan at 1% for 2 years. And that's for loans that are funded prior to June 5th. And the loan term is 5 years for those funded after June 5th. If you have a larger PPP loan after you've applied for loan forgiveness, you can work with your lender on a mutually agreeable basis. The legislation allows you to do that to negotiate a loan term of 5 years if you were funded prior to June 5th, but it has to be by mutual agreement with your lender. We're hoping that there's a substantial number now that really do not get, that all of which do get loan forgiveness. So what about the definitions? So we're going to cover this a couple times, but the basis to know is that payroll costs are all cash contribution to the employees, including salary, wages, commission, cash tips, vacation pay, hazard pay, reasonable bonuses, and parental, family, medical, or sick leave. And then severance pay is included as well. And then employers' payroll costs for health insurance, retirement plans, local and state taxes. All of those are eligible for loan forgiveness under the definition of what constitutes payroll costs. One of the things that we've learned about this loan forgiveness process is that if a majority, and many of you, have chosen the 24-week or had to choose, wind up with a 24-week covered period, many of those are coming up, the end of those this month in October. The final date for those is the end of December. So all covered periods end by December 31st. But once your covered period ends, you still have 10 more months after the last day to convert that to a loan. So this process is taking longer. We will tell you in a bit what steps or when it is you should apply or can apply for your loan forgiveness. But keep in mind that there isn't a lot of pressure to extend or delay the loan forgiveness or to do it right away. There's plenty of time to do this. And then there's a process once you do apply for the loan forgiveness that I'll explain in a minute as well. The good news is that if you do get loan forgiveness on anything, you are not going to be required to pay any interest on that portion that's been forgiven. So there won't be any accrued interest that will be added onto anything. But if there is a portion that is not forgiven, then the interest at 1% will be accruing from the date that the loan was funded. Expenses that are forgiven may not be allowable business deductions for year-end tax reporting. We're waiting for additional guidance from the IRS on this topic, but as it stands right now, expenses that do wind up forgiven may not be allowable business deductions. You should be able to get additional information from your CPAs on that when the time comes here in the first quarter up to April, or if you delay until October of next year to do 2020 taxes. There are some costs that are not eligible for either the use of the PPP funds or loan forgiveness. And that is salaries that are in excess of $100,000 cash compensation. And for sole proprietors, and there is a math element to this that we're going to share with you. Employees whose principal resident is outside the U.S., or if you applied for and received the sick or family leave under the Families First Act, which was the first stimulus bill. And independent contractors. Independent contractors are not eligible as employees for the purpose of PPP loan forgiveness. And this is true These items that I've been talking about here are true for all of the forms of the PPP loan forgiveness application process. Independent contractors had the ability to apply for their own PPP loans. So definitions of the covered period. And in the covered period, as it's defined in the legislation and in the interim final rules, covers another review of whether or not you were eligible for the loan in the first place, whether or not you used the funds appropriately, and whether or not you completed the loan forgiveness requirements, as we are going to discuss. All of this is determined and finalized at the time of loan forgiveness during that portion that the SBA reviews these. You can only choose a period, covered period of 8 or 24 weeks. Janie's going to actually describe that in the number of days. But it's important to note that while you may utilize your funds for a time period that's less than your chosen covered period, you do choose one of the other of these in the loan forgiveness process. Some costs incurred before the covered period and paid during the covered period, as well as some costs incurred during the covered period and paid afterwards, can qualify for forgiveness. The alternate payroll covered period, which only applies to payroll, not the other expenses, may allow the covered period to start on the first day of the normal pay period rather than on the disbursement of the funds, which does apply for everything else. Also, it's true that those that have combined debt of over $2 million or a PPP loan of over $2 million may be subjected to, and this has been announced since the beginning of the CARES Act, subjected to audits. So in the EZ form, as well as the 3508 long form, there are check boxes that identify whether or not you received a PPP loan of $2 million or more. And you do not want to check that box for the 89% that are under $150,000, because that might flag you for an additional audit. So you want to make sure that you do not check that box unless your PPP loan was over $2 million. Details of the 3508 short form, and we're using the number of the form now to describe them since we've got 3 different ones to choose from. These are used for loans of $50,000 and under. As we've described, it does waive the full-time equivalent requirement, which is going to make it a lot easier for the 68% of these smaller loans to meet this. And it waives the employee wage reduction limit of 25%. So that's another important factor. But as we've mentioned, you cannot have other affiliated debt of more than $2 million. And we're going to go into the documentation, but you are going to need to submit at the time that you request the loan forgiveness, the basis and proof of the payments that have to be submitted with that form. What about the EZ form? So here's the eligibility criteria to use the EZ loan forgiveness form. And keep in mind now, most people with loans over $50,000 may choose to use this one or the longer 3508 form. But to qualify for the EZ form, you're self-employed and have no employees, or you did not reduce the salaries or wages of your employees by more than 25%, and you did not reduce the number or hours of those employees. Or you experienced reductions in the business activity as a result of documented health directives at the federal and or state government level related to COVID-19, and you did not reduce the salaries or wages of your employees by more than 25%. So you have to be careful about the things that actually apply to you, because on the 3508 EZ form, you have to certify one of these 2 things. One, you did not reduce the number of employees or the average paid hours between January 1st and the end of the covered period, other than documented reductions due to the inability to rehire for various reasons. Also, termination for cause is an eligible item here, or you could not find qualified employees to replace the ones that you were unable to rehire. Or, and again, it's an either or, you are unable to operate between February 15th and the end of the covered period, at the same level of business activity as before February 15th due to government documented, either at the federal or broadly at the state level, related to COVID-19 compliance. You also need to know, and I'll say this a couple times, all records relating to the loan have to be maintained. And this is all the documentation that you have to submit, plus the loan application information and everything else has to be maintained for 6 years after the loan has been forgiven, or any remaining portion of the loan is paid in full, and you must permit inspection of those documents on request. For self-employed individuals and sole proprietors, you're eligible to use the 3508S and the 3508EZ loan forgiveness application if you meet the certain conditions that I've just described. Original PPP loan amount is related to payroll costs. That's directly on line 31 of your 2019 Schedule C. And getting those caught up was one of the things that several people needed to do to be able to actually get a PPP loan. So that's the basis for 850 seconds if you are part of the 8-week covered period, or 2.5 months of the 2019 compensation if you use a 24-week covered period. Loan forgiveness is based on the use of the funds. And again, we'll repeat this a couple times, but it's at least 60% for payroll, meaning that it can be as high as 100% for payroll, and no more than 40% for rent, utilities, and mortgage interest. And this is true for all 3 loan forgiveness application forms. So amount paid to users, user owners who do not exceed $15,385 per individual for the 8-week covered period, and $20,833 for those on the 24-week covered period. And what that means is that that's the $100,000 cap for owners who are getting owner draws, typically not on a W-2 basis, and applied for the PPP. That's the limit that you have relative to both loan forgiveness and the amount of money that you, the basis for the PPP funds to start with. So what are those basics? The eligible costs are payroll, and then there's business rent, mortgage interest payments, and utility payments. Those latter 3 have to be based upon agreements, leases, or loans that were documented in effect prior to February 15th for all 3 of those. And you'll need to provide that documentation. And as I mentioned, payroll costs for at least 60% of the PPP loan forgiveness, but no more than 40% for total for the other 3 combined. And then the salary and wage reduction, as we've mentioned, can be no more than 25% during the covered period. We're not aware that very many actually kept their employees on and reduced their salaries by 25% or something like that. But there are some who did. And for those that did, that becomes an element in this process. And then you have to maintain some sort of a full-time equivalent during the covered period as prior to the covered period. And that average FTE is a comparison basis that's used unless you qualify for one of the safe harbors. So what are the safe harbors? Well, the safe harbor, which is primarily in the 3508, which we refer to as the longer form, you have to choose one of these 3 things. Number 1, you had no reduction in employees or average paid hours. Or what they're calling safe harbor number 1, your second option, is unable to operate between February 15th and the end of your covered period at the same level of business activity as before February 15th, due, as I've said, to documented government COVID-19 compliance. And you'll have to have that documentation. That does suggest that most people who are taking this safe harbor are likely to wait until the end of the covered period so that they have the complete documentation of the government orders relative to COVID-19 compliance. Safe harbor number 2 then is whether or not to determine whether or not you satisfy the FTE or full-time equivalent requirements as shown on the worksheet for Schedule A, which includes tables 1 and 2, and then pages 4 and 5 in the instruction, which Janie is going to show you here in a minute. And this all relates to the longer form. So what's the loan forgiveness process on the timeline? First, the borrower submits a completed, and I've got to emphasize that, a completed borrower application for loan forgiveness. That means that you have to have the documentation, which I'll describe in a second. But the lender can come back and say, your application is not yet complete, you need to submit additional things. Once there's a completed application, then the lender has 60 days to review that. And at the end of that 60 days, or sometime in between, they submit it to the SBA. And then the SBA has 90 days to review that. And that's an important element to note. So for some people who the end of the 24-week covered period comes, let's say, at the end of November, and then you have 10 months to actually apply for the loan forgiveness, and then there's up to pretty close to 5 months for the lender and the SBA review. The point I'm trying to make is that this process, for many PPP borrowers, is going to take some time and may not necessarily be something that you need to rush. So it's important to recognize that, but we're hoping that with the new, as of last Friday, $50,000 and under, those who qualify for that, and the shorter form that Janie is going to show you, that you're going to be able to have a much faster processing to get through this. And we hope that that winds up being easier for the 68% who have loans under $50,000 or under. So what are the documents you need to have? For payroll, it has to be proof of payments. This is in addition to the loan application forms. So for all 3 forms, you're going to have that proof of payment. That means the records from your third-party payroll processor, or bank statements, canceled checks, evidence of ACH transfers, however you do process that payroll, require proof of payment, so that not something that can be invented. You actually have to be able to demonstrate that it was done. And for non-payroll, you have to have the proof of the obligation and the proof of the payment. In 3508 only, you have to have the PPP documentation that we described. And in the EZ, you have to have the FTE information if it's applicable. But you still have to meet the certification criteria that I had described earlier in a previous slide. For non-payroll documentation, just so that you are aware, for those of you that up to 40% use of your PPP funds that may have gone to a non-payroll purpose, you've got to know that if you're going to use it for the mortgage interest payments, you have to include your amortization schedule and the receipts of those payments. For rent or lease, you actually have to have the lease agreement and the receipts of the lease payments. And for utilities, you have to have the invoices from February 2020 and invoices paid during the covered period and the receipts. So you've got to have all of that stuff to be able to qualify and have the correct documentation for loan forgiveness. We had mentioned earlier that there's this issue, if you will, relative to the economic injury disaster loan advances. And the EIDL advance was different than the EIDL loan. The EIDL advance was initially identified to be a grant, which for many, it turns out that that's the case if you just applied for and received an EIDL loan. But for those of you that did apply for the EIDL and received the EIDL advance, which was $1,000 per employee up to $10,000, and you received the PPP, when you submit for that loan forgiveness, the SBA is going to reduce the amount of forgiveness by the amount of the EIDL advance. You do not subtract that when you submit your loan forgiveness, and the lender doesn't subtract it either. When the process goes from you in a completed application, asking for full or partial, whatever it is you qualify for in loan forgiveness, The lender does a review of that, and then the SBA then receives that review from the lender, and they do a review. They're going to compare the tax ID numbers, either your social security number or your EIN, employer identification number. They're going to compare that between the PPP loan and the EIDL loans that the SBA has processed and received your information on. And they're going to then remit back to the lender the amount of loan forgiveness less the amount of an EIDL advance and any other portion that that they feel is not allowable under the loan forgiveness guidelines. So what can the lender? The lender then has 4 decisions. They can approve your loan in full. They can approve your, and I'm talking loan forgiveness in full, or they can approve it in part, and which means that you may wind up with a portion that you want converts to a loan, or they can deny it altogether, which means the full portion may convert to a loan, and they can deny it without prejudice, and that applies when the SBA notifies a lender that a particular borrower is going to have an audit. In the case that the lender learns about that, they will deny it without prejudice, which means that it would stand as denied until the audit is completed. So what happens then if there's a remaining portion that is not forgiven and is due? That the SBA then transmits back to the lender that portion of the money that is going to be forgiven. So that portion of the PPP loan gets paid. And then the remaining portion, the lender then has to notify the borrower of the amount that the SBA is willing to pay on the loan, as well as the amount that is remaining due. The lender has to continue to service that remainder portion, and the borrower must repay that remaining loan balance by the maturity date, either of the 2 or the 5 years that I described before. This last portion here is real important. If the borrower is determined to have been ineligible for a PPP loan for any reason, or if they discover that the actual money was used incorrectly and did not meet one of the criteria, there's 4, for the use of those funds, then the SBA may seek repayment of the outstanding PPP loan balance or pursue other available remedies. So there's a set of representations and certifications. Janie's going to show these to you in a minute, but all of the forms, all 3 of the forms require you to make certain representations and provide a signature where you certify that you know and understand the rules, including the eligibility, the use of the proceeds, and the loan forgiveness qualification. The SBA can review these at any time. The lenders are required to confirm your calculations on the loan forgiveness application. And the SBA does have some rules for appeals, although as we understand those rules and I've read through them, it's going to be difficult for anybody to appeal when it's a small loan amount. But for those that have larger loan amounts, it is a possibility to pursue an appeal process. Almost certainly you're going to need an attorney to support you with that. Here's a couple additional information details. We do have an SBA FAQ that further defines who is an eligible owner relative to the various legal entities. And so we can provide that on request, or you can look that up yourself. You were given a link to a website when by Christina and One Redmond when the process started. Our presentation started today, and you can follow that, or you can ask us for it. So when can you actually submit for a loan forgiveness application? When the borrower has used all of the funds, or the borrower has all the documents related to the use of those funds, and your lender is ready to accept the applications. The good news is that while it got to a slow start, the PPP loan forgiveness process has picked up. More and more lenders are now accepting those loan forgiveness applications, and the SBA is reviewing and is now returning their a review of that back to the lender. You should know that if you apply for the loan forgiveness before the end of your covered period, and the annual salaries or wages of your employees were reduced by more than 25%, then you have to account for that reduction through the full end of the covered period, and it may reduce the portion of loan forgiveness. If you wind up with only a portion of the PPP loan forgiven, or in some cases that loan forgiveness, and this applies to all three forms, even the new short form, if you don't have the correct documentation to support that PPP loan request, even in the new short form, it could be denied or reduced based upon your documentation. Loan payments then are required for any non-forgiven portion. The payments have to start at that point in time that the SBA notifies the lender, remits the loan forgiveness amount, and then the lender notifies you and establishes the payment process for that portion that's not forgiven. For those of you, and there are a few, we've been dealing with some questions about PPP borrowers who are selling their business. We do have additional information if that happens to apply to you. We do have new guidance that came out just last week on this. Feel free to reach out to us and we can help you with that. That's the end of my slides. I'm going to turn it over to Janie here in just a minute. And I want to let you know, though, that we are part of the Small Business Development Centers throughout Washington State. We have 25 locations. We have 33, soon to be 34 advisors located. Here's your map. You can please reach out to us. You can go to wsbdc.org, contact an advisor, or easy way to get through to us really within a very short time frame by hours or less, Washington at wsbdc.org, or 833-492-7232. And with that, I'm going to turn it over to Janie. Are you able to unmute, Janie?
I am. I'm on.
Super.
I was just finishing up a question Q&A.
Right.
Thank you, Steve. Okay, great job as always. And we're going to go through some examples, and I'm going to be a little bit more specific on some of my the information I give you based on some of the questions that were in the Q&A that I responded to. So let's go on to the next slide, please. Again, all of this information is updated as of yesterday. What I want you to see is this difference between the covered period versus the alternative covered period. It really has to do with how frequently you issue payroll. If you issue payroll twice a month or less frequently, then you may only use the standard covered period. And the standard covered period starts on the date of disbursement of your PPP loan. And for those of you who were early appliers and received your loan prior to June 5th, you have the option of using an 8-week covered period or the 24-week covered period. All right. And for those of you who issue your payroll weekly or every 2 weeks, you have the additional option of the alternative payroll covered period, which begins on the first payroll date after the loan funds have been dispersed. And again, that 8-week or 24-week period applies for you if you were an early applier and received your funds before June 5th. You may also opt to use the standard covered period, your disbursement date. So that's a little bit of the definition there. Next slide, please.
I think I need to get the host back.
No problem. Okay, example 1 is going to be the new form 3508S. And so with this example, I made the assumption that we have a sole proprietorship with 2 employees. The loan amount is $50,000 and they received an idle advance of $3,000. Next slide, please. The PPP loan forgiveness application form 3508S is a 1-page document with an optional 2nd page. So it's self-contained on this 1 page, unlike the other application documents. Next slide, please. The top of the document is all about the data related to the business. The business's legal name, the trade name, the business address, the tax identification number, which can either be an employer identification number or a social security number, the business phone, and the primary contact and the email address of the primary contact. As you drop below the box, what you see is a reference for the SBA PPP loan number. You find that on your SBA authorization, which your lender should have provided to you at the time they sent you your loan documents for signature. The lender PPP loan number is that is on the actual lender's note payable. In this example, I used a $50,000 amount for the PPP loan amount and a disbursement date of July 31st, 2020. The number of employees at the time of application was 3, and at the time of forgiveness application was 3. The economic injury disaster loan advance amount was $3,000, $1,000 per employee. And again, that product maxed out at $10,000, okay? The economic injury disaster loan application number can be found in the Office of Disaster Assistance's email acknowledging your idle application. This business is applying for a forgiveness amount of $50,000. And I want to just stop right here because there were a number of questions related to that idle advance in the Q&A. And here's what's going to happen, and Steve indicated this, but I want to reiterate it. Your lender is going to make a recommendation to the SBA through the portal, the SBA portal, as to the dollar amount that they are certifying for your loan forgiveness. Okay, and they're doing that based on your application and the dollar amount documentation supported by your application in all of your documents for the amount of your PPP loan. Okay, so the more documentation you provide to support your loan amount, the better. All right, because you need to make sure your lender is good with your evidencing the use of the proceeds. All right. Regardless of the idle advance amount, your lender is going to submit their reviewed certified dollar amount for forgiveness. When the SBA is doing the review, the SBA will make a determination if your PPP loan amount forgiven is reduced by the amount of the idle advance. And this is what they're going to be looking at. If you received your idle advance before you applied for your PPP loan, you have the opportunity at that application to reduce your calculated 2.5 times monthly average payroll by the amount of the idle advance. If you did that, then you have the opportunity for full forgiveness on your PPP loan, and you're automatically getting full forgiveness on the idle advance. All right. If you received your idle advance after you received your PPP loan, then it's very likely you're going to have a reduction in the PPP loan forgiven amount by the idle advance amount, okay? And if in the earlier example, you did not make the negative adjustment for the idle advance amount, again, your PPP loan amount will be reduced in terms of the amount forgiven. So just adding some clarity there. Next slide, please. At the bottom section of the 3508S form, this is where you're going through and actually certifying all of the information that you're providing here. You're talking about compliance with the 60% minimum use of PPP loan amounts, compliance with your 8 or 24-week period of time as it relates to the owner-employee compensation, the fact that the federal government may pursue recovery of loan amounts and or civil or criminal fraud charges if the funds were knowingly used for unauthorized purposes, and so forth. As you go through, you're certifying that you're going to be documenting the use of the proceeds with this application, and that you submitted your documents to the IRS, your tax returns, and so forth. So what you need to do is read through each one of these and initial them, and then sign the document and put the date on your title, print your name. All right, pretty straightforward. So the big thing here is that now, as soon as you've used the proceeds and you can document the use of the loan, and your lender is ready to accept the application, you're ready to go. And this is a very significantly reduced process for the forgiveness application form. All right, next slide, please. The optional page 2 is the demographic data for each 20% or more owner of the borrower, and each officer and director. And what we're really trying to collect here is a demographic data based on your veteran status, your gender, your race, and ethnicity. And usually we have the lenders try and collect this information at the beginning of the loan process in an effort to be expedient at the beginning of the program. This was not done. So we're trying to collect this information at the end, but it is voluntary and it is optional, but that's why we're trying to do it. And this particular form is consistent in all 3 applications. Next slide, please. So now we're moving on to the EZ form versus the regular form. And what I want you to really focus on here is that there are 3 categories of eligibility to use that EZ form. So if you're a self-employed individual or an independent contractor or a sole proprietor with no employees at the time of the PPP loan application, again, you have the immediate opportunity to use the EZ form. If you have employees, then the second criteria, and you have to meet both of these, is that the borrower did not reduce the annual salary or hourly wages of any employee by more than 25% during the covered period or alternative covered period as compared to first quarter 2020. And the 2 exceptions are if you, well, I'll finish this one. Okay, in this wage and annual salary is for the employees that received not more than $100,000 in annual compensation in 2019. Okay, it does not cover or there's no requirement for those that earned more than $100,000. All right. The other thing you have to comply with is that the borrower did not reduce the number of employees or average paid hours of employees between January 1 and the end of your covered period. but there are two exceptions here. One is that if you had an employee voluntarily quit and you posted the position, but did not have an ability to rehire someone with similar qualifications, that FTE reduction does not count against you. The other is that if you offered an employee the restoration of their hours and they refused, then that does not count against you either. But you do need to document that occurred. The third category here is the safe harbor, generally speaking, as it relates to the guidance from federal agencies and the governor. So again, the third one here is repetitive about that not more than 25% reduction in the wages or annual salary. But the difference here is the bottom element. And if the borrower was not able to operate during their covered period at the same level of business activity as prior to February 15th, based on compliance with guidance issued by Health and Human Services, the Center for Disease Control and Prevention, or OSHA, and what's not listed here but is accepted is any guidance or requirements issued by Governor Inslee for our state, then you do not have to worry about the FTE reduction. However, you do have to wait until the end of your covered period to apply for forgiveness. Next slide, please. So we're going on to example 2, using the 3508EZ form for a sole proprietor. And I made the following assumptions. It's just John Smith is a single owner. He pays himself the stated amount $76.9250 for a draw once a month. Rent expense is $2,000 per month. Utilities are $307.50 per month. And I'm going to give you the two different examples, one for a 56-day covered period and then also for the 168-day period, so you can see the difference it makes for this type of business. And again, the forms are in the slide deck through these links. Next slide, please. This is the page 1 of the application for the 3508EZ. We're going to look at a populated example next. Next slide, please. The top of the form is almost identical to the 3508S form. So I'm not going to go over all of that again, but what I do want you to see is toward the bottom here, the pay schedule needs to be identified. And in this example, I used a monthly pay period, which I marked that box. Next slide, please. So what I'm showing you here is two different examples. One for the covered period of 56 days. And you'll note that the covered period starts on April 15th. That was the date that I selected as the disbursement date for this example. So if it runs 56 days, you include the date of disbursement as the first day and you run 56 days. In this example, it would go from April 15th to June 9th. The other option that is available in this example is to use a 168-day period. And the covered period, again, would start on April 15th and then run through September 29th. Below each example, you see what Steve was referring to regarding that box, not to check if your loan amount is under $2 million. And clearly, if your loan amount is in excess of $2 million, you do need to mark that little check here box. But don't check it accidentally, because then it may create a little bit more work for everyone. Next slide, please. So let's look at the 56-day column. Line 1 is payroll costs. The maximum allowed payroll costs for an owner employee during that 56-day period is $15,385. Line 2 in this example, I assumed that there was no secured equipment loan, so there was no interest expense. Line 3, I allocated $4,000 for business facility rent. And on line 4, I allocated 2 months of business utility payments. Line 5, you're adding up lines 1, 2, 3, and 4. They total $20,000. Line 6 on this form is the PPP loan amount. Again, in this example, $20,000. Line 7 is the trickiest line on the entire form, okay? Because what you're doing is you're taking line 1's total payroll costs and you are dividing it by 0.60. And what this is a really quick visual for someone looking at this document to say automatically, yes, the payroll costs were at least 60% or more. And how you know that is that if line 7 is above the PPP loan amount or larger than, then we automatically know that you used more than 60%, or at least 60% rather, of your proceeds for payroll. Line 8 is the actual forgiveness amount you're applying for, and it is the smallest of lines 5, 6, or 7. Now, same business, but if John Smith took the 168-day or 24-week covered period option, then line 1 could be a maximum evidenced use of $20,833 for owner-employee compensation. Line 2 would be 0, line 3 would be 0, line 4 would be 0, and line 5, again, you're adding up lines 1, 2, 3, and 4. That totals $20,833. Line 6, again, is your PPP loan amount. Line 7 is taking line 1 and dividing it by 0.60. And then line 8, again, is the smallest of lines 5, 6, or 7. And in this example, again, is $20,000 is the forgiveness amount being requested. Now, one thing I do want to point out here on the easy form, for those of you who have employees and have the ability to use this form, line 1 payroll costs will be the inclusion of all the eligible employee wage expense related items plus your owner employee wage, all in that one line. All right, next slide, please. This is the page 2 certification document. Again, you're certifying the use of the proceeds, your percentages, you know, all of the nuts and bolts information. And in this example, and for the easy form, again, the certification is a little bit different because the first 2/3 of the lines, you have to certify all of those items, okay? When you get to the bottom third, there are 2 different items that can be certified, but you only are required to certify 1, all right? So at a minimum, 1 of those needs to be certified. And again, you're signing the document, putting your name, sole proprietor in this case is the title. And again, for the application process here, what I want you to just hear me say is that you're at the earliest, you can apply for forgiveness when you've used all the proceeds, when you can document the loan and your lender document the use of the loan proceeds, and your lender is has the ability to accept your application. However, if you're relying on that third set of criteria where your business has been impacted by the mandates or guidelines from those agencies or Governor Inslee, then you do need to wait until the end of your covered period to apply for forgiveness. All right, next slide, please. This again is your optional form. I'm not going to go over it, but I just want you to see that it is part of the application. Again, as an option. Next slide, please. I keep including example 3 for a corporation in this slide deck, but I am not going to cover it for time efficiency purposes. But it is, you could interpret this for a corporation or a limited liability company, and it's an example with employees on how to complete the 3508EZ form. So let's skip down to example 4. Right there. Great, thank you. So example 4 could be for an LLC or a corporation. Really doesn't matter about the legal entity type. But what we're talking about here is a business that has employees and one that needs to use the long form. So this example will be for Form 3508. And the borrower is ABC Painting, doing business as All Weather Painting. They have 100 employees. Their wage expense is $350,000 in aggregate. They do have a secured equipment loan. They have rent expense. They have utility expense. And their only option is a 168-day covered period based on this example. And again, the links to this form are included in the slide deck. Next slide, please. This is page 1 of the form, and we're going to go over this a little bit section by section. So let's start. Next slide, please. Same information consistently at the top. In this example, I used a weekly pay schedule so that you could see what the difference is. All the other information above is consistent on all 3 forms. Okay, next slide, please. The reason that this business only has the 168-day covered period as an option is because of its disbursement date being after June 5th. So it has 2 options because they pay weekly. They can use the standard covered period using their disbursement date of June 30th as the beginning of their covered period, and then it would run to December 14th, 2020. Or they could use the alternative payroll covered period, which is the first payroll date after the disbursement date. In this example, I used July 6th, 2020, and their 168-day covered period would run through December 20th, 2020. And again, on all of these, I have left this box blank because none of these loans have been more than $2 million. Next slide, please. So when we're looking at page 1 at the bottom and you're doing your forgiveness amount calculation, what I really want you to see or think about is that this actually is a summary page of information that you would have completed in the Schedule A worksheet and Schedule A document and transferred over to page 1 of the application form. As we go through this process, you'll see where some of these numbers are coming from. So line 1 is the total payroll costs. And as Steve indicated, that includes wages, tips, incentive pay, severance pay, bonuses that are reasonable, your vacation pay, your sick pay, your family leave act pay that is funded all by the borrower. And it also includes your health insurance, your health insurance premiums and your state and local taxes that are paid by the employer. It does not include federal taxes that are related to payroll. It does include your retirement dollars. And in that number, the owner compensation is included in there too. And you'll see again where these are all derived from. And they will be on Schedule A, line 10. All right, line 2, we're allocating approximately $30,000 for interest expense on the business asset secured loan. Line 3 includes facility and equipment leases. And in this case, it's $90,000. And then line 4 are business utility payments of $30,000. So what I'm going to just do for a minute here is have you think about what documentation you're going to be providing for your payroll. You're looking at your whatever payroll records you have. If you're a smaller business and you don't use a payroll service, you may need to have copies of your canceled checks and that flow through. And if you have a service like Paychecks or ADP or Intuit or something like that, you more than likely have enough information from the payroll records they provide you to support the use of the proceeds. For the interest expense payments, definitely you want to have your bank or credit union, whoever you borrowed the money from, their statement, and then your supporting canceled checks or evidence of electronic payment from the bank account statement. Line 3, you want to have copies of your leases and any addendums to them that have increased or the evidence of your actual lease payment due now. And then for business utility payments, you want to have all your billings, your invoices, and again, copies of the canceled checks or electronic payments as evidenced on the statements. All right. So you have all of that nuts and bolts done. Now you go to the middle of the document. And if you have had salary or hourly wage reductions on your employees or a reduction in your full-time equivalency number, then you're going to need to do a little bit more work using this form. And lines 5, 6, and 7 are the impact of those wage reductions or FTE reductions on your forgiveness amount. Line 5 has you adjust for the total salary or hourly wage reduction amount, and that is transferred from Schedule A, line 3. In this example, I made the assumption that the business paid their employees at least 75% or more of their pre-COVID salary or hourly wage. So the impact in this example is 0. So when you go to line 6, you're adding up lines 1, 2, 3, and 4 and deducting line 5. And the dollar amount ends up being $500,000 in this example. Line 7, what you're doing is you are calculating your reduction quotient, and that is taken from Schedule A, line 13. In this example, the reduction quotient is 1 because there was no reduction in the employee FTE from the time of the application for your PPP loan versus your time of forgiveness application. If you did have a reduction, your number would be something less than 1 on line 7. Now, when you drop down to the bottom, you're looking at your potential forgiveness amounts. So line 8, you're doing a math function. You are multiplying line 6 by line 7. In this example, $500,000 times 1 is $500,000. Line 9 is your PPP loan amount of $500,000. Line 10, you're doing that calculation again from line 1 and dividing it by 0.60. Again, that's a visual evidence that your company has met that minimum 60% requirement, so long as line 10 is above the dollar amount in line 9. When you go to line 11, you're looking again at the smallest of lines 8, 9, and 10, and in this case is $500,000. So this company is applying for full forgiveness of their PPP loan amount. Next slide, please. Page 2 is a certification. Again, very similar, but on this particular document, you need to go through and initial all of those items and review them. And again, you're talking about all the same stuff: use of proceeds, documentation to support your use of proceeds is being submitted. You're telling the truth on the documents. You've got your tax forms in to the IRS, etc. And so very straightforward. And again, one thing I want to point out here is that there are a couple of safe harbors built into this application process too. So if you have a reduction in your FTE, or the mandates and guidelines by the government agencies or the governor impacted you, you do need to wait until the end of your covered period to apply for forgiveness so that you can utilize those safe harbors. All right. So at the earliest, when you can apply is when you have utilized all of the funds, can document the proceeds use, and your lender is willing to accept your application. But I have to say, if you have had a reduction or impact on your operation due to these mandates, please wait until the end of your covered period to apply. And at this point, what I do want to remind you is that regardless of whichever application form you use, you do have 10 months after the end of your covered period to apply for forgiveness. All right, so there is not a rush here other than any desire that you may have to get this loan forgiven as early as possible. All right, next slide, please. Now we're taking a look at the infamous PPP Schedule A. This is your summary document related to your use of proceeds for the payroll and your adjustments for your full-time equivalency. Next slide, please. Let's look at a completed form. So on line 1, what you're entering in the first set of lines here for lines 1, 2, and 3 is information related to all of your employees, excluding the owner employees, that earned $100,000 or less in compensation in 2019. So on line 1, you're entering the cash compensation.
Well, I think we might have lost Janie a little bit.
This does happen from time to time, Christina. I think
Sure.
if we just wait, she'll pop back in.
Okay.
Many of these webinars, it takes her a couple minutes and then she's back. So let's give her a sec.
All right. Sounds good. Sounds good. And I want to encourage you all out there. Our SBDC team is doing a great job answering the questions in the Q&A portion of the site. So make sure you put your questions in the Q&A, and we will be submitting, sending you an email with the recording of this webinar, as well as with the Q&A that's listed here too. So you will be getting that at a later date.
I'm back.
And she's back. Okay. Go
All
ahead.
right.
Go, Janie, go.
So we're almost to the end of this. But line 1, again, is wages, tips, your bonuses, your incentive pay, vacation pay, sick pay, Family Leave Act pay, that is all paid by the employer. Again, it is for those employees who earned $100,000 or less in 2019. And you'll see here that line 1 is actually pulled from table 1, box 1, as I'm indicating. And you'll see the worksheet schedule here in the next few slides. Line 2, you're entering the average FTE from the PPP Schedule A worksheet table 2, or I'm sorry, table 1, box 2. All right. And then line 3, you're actually looking at box 3 on the same table, and it is your adjustment that you're calculating for any change in your compensation as it relates to employees receiving less than 75% of their pre-COVID compensation. And in this example, I have $259,200 for cash compensation, and the average FTE was 100 because they didn't lose any employees. So then line 3 is 0 impact because this company did pay their employees at least 75% or more of their pre-COVID compensation. The next section, excuse me, for lines 4 and 5 are applicable for those employees who earned more than $100,000 in 2019, and again excludes owner employees. In this example, the impact is 0 for both line 4 and line 5 because I made the assumption that there were no employees who earned more than $100,000 in 2019. Now, when you drop down to line 6, 7, and 8, these are for all of the non-cash compensation payroll costs for your selected covered period. Line 6 is for the health insurance paid by the employer. Health insurance includes medical, dental, and vision. Line 7 is the employer contributions to employee retirement plans. And line 8 is the employer paid state and local taxes assessed on the employee compensation. When you drop down to line 9, what I want you to note is that is the place where the compensation to owner employees goes. And I believe I supplied to One Redmond the schedule or frequently asked questions that outline, based on legal entity type, what can be included for the owner employee compensation on this line. All right, but only the owner employees goes on line 9. And if you have more than one owner employee, you're going to have to provide a schedule so that your lender can see that you're in compliance with that maximum dollar amount based on your covered period. And then line 10, you're adding up lines 1, 4, 6, 7, 8, and 9. And you'll see line 10 totals $350,000. And if you remember back to page 1, line 1 transferred from line 10, $350,000. Next slide, please. All right, here, this is where you're going to do your FTE reduction calculation if applicable. So in my example here, there was no reduction in the employees or average paid hours. So that box was marked. However, if you did have a reduction, then look to the FTE reduction safe harbor number 1. And what I really want you to always do is read through the dates that they're indicating, because that's really important throughout this particular application. If you were unable to operate between February 15th and the end of your covered period at the same level of business activity as before February 15th, due to compliance with Requirements established or guidance issued between March 1 and December 31st by Health and Human Services, the Director for the Centers of Disease Control and Prevention, or OSHA. And what is not listed here, but is also allowed, is the guidance or requirements issued by Governor Inslee. If your operation was impacted and you could not staff at the same level, then you would mark that box at the end of Safe Harbor number 1, and you would be essentially exempted from the FTE reduction that you experienced. All right, and you have the opportunity for full forgiveness. But again, you have to wait until the end of your covered period to apply for that. All right. And then the last one is actually the FTE reduction Safe Harbor number 2. And you're actually going through here and calculating your reduction. And if you cannot use the 2 prior FTE calculations, you know, then you have to do Safe Harbor number 2 and do your actual calculation. In this example, we have 100 employees at the for the average FTE during the borrower's chosen covered period. On line 11, line 12 is a total average FTE. That is 100. So when I do the math calculation on line 13, taking line 12 and dividing it by 11, I'm sorry, dividing line 12 by line 11, then my answer is 1. If you did experience a reduction in your FTE and you cannot use Safe Harbor number 1, line 13 will be something less than 1. And that line 13 is transferred over to page 1 of your application document. Next slide, please. This is the Schedule A worksheet blank. Next slide, please. What it looks like semi-completed here is you put your employee's name, their tax identification number, their annualized cash compensation, their average FTE, and you will then put in any salary or hourly wage reduction. So when you look at that total line, you'll see the notations for box 1, box 2, box 3. Those are what we're transferring over to the Schedule A. And if you have more than 7 employees, then I would encourage you to put together an Excel spreadsheet in a similar format here. So table 1 is again for employees who earned $100,000 or less in 2019. Table 2 is for those employees who earned more than $100,000 in 2019. And again, you're filling out the same type of information. You do not include owner employees in either one of these 2 tables. Next slide, please. This is your demographic data again. It's the same document as the other two forms. Next slide, please. If you do have employees who were impacted by the paying them less than 75% of their pre-COVID wage, then you need to fill out pages 4 and 5 of the instruction document for each employee impacted by the reduction. You also have to complete this for those employees where they had the reduction in their average FTE. So again, you only need this for those employees that are impacted by that. And you do have to fill out page 4 and 5 per employee impacted. Next slide, please. And I didn't complete this, but what I want you to really focus on again here is the fact that there are significantly different dates in here that you're responding to in these questions. So please make sure you really focus on the dates because they will have an impact on the end result of these calculations. Next slide, please. This is the end of it with page 5. And again, because this is the instruction form, it goes on about the FTE reduction safe harbors. But again, that's a little bit redundant information. Next slide, please. We're at the end of my portion of the presentation. Please call us on the 206-553-7310 number. We are not in the office, so when you call this number, you will go to a voice messaging system. Please be assured that we are checking that number for the messages throughout the day and trying to get back to everybody as timely as possible the same day. We may lapse a little bit into the following workday if they come in a little bit later, but we really strive to answer your questions the same day. So thank you very much, and back to you, Christina.
All right, thank you so much. Thank you to our speakers, Steve and Janie, for giving us your time and expertise today. We very much appreciate it. I want to say thank you again to all our partners on the East Side who are working hard to support our business community during this pandemic. And on behalf of One Redmond, One East Side, we thank you all for participating. If you have other topics you would like to see us cover or specific speakers you would like to hear from, please let us know as we are looking to prepare our upcoming webinars. Again, we will be sending up a follow-up email with a link to the recording of this webinar, and it will be including the links to the resources that were referenced, as well as the answers to the questions that were asked during this webinar. For key resources, weekly webinars, and grant opportunities, go to eastsiderecoveryhub.com. And I want to thank you again, and please stay safe and healthy.